Hello and welcome back to Money Moves Daily, your Mumbai market report. It's Thursday, September 4th. I'm Sophia Reyes.
And I'm Jason Miller. Sophia, Dalal Street is buzzing today, and it feels like a pre-Diwali celebration has kicked off early. The Sensex and Nifty are both trading significantly higher this morning.
Indeed, Jason. The market's exuberance is largely a direct response to the recent GST Council meeting, which delivered some significant rate cuts. This is our big story today: what these GST 2.0 reforms mean for consumers and corporate India.
Plus, we'll delve into the specific sectors seeing massive rallies like auto and FMCG. We've also got some quick hits on regulatory moves by SEBI and the RBI, and later we'll tell you why next week's CPI inflation data is absolutely one to watch. So, let's get into it.
All right, Jason, let's start with this major development. The GST Council has approved sweeping rate cuts across a wide spectrum of goods and services. We're talking daily essentials, small cars, two-wheelers, and even certain personal care products. This is being hailed as a GST Diwali bonanza, aimed squarely at stimulating consumption ahead of the festive season.
A Diwali bonanza, Sophia? That sounds fantastic. For the average Indian family, what's the real impact here? Does this mean my monthly grocery bill might actually see a noticeable dip, or are we talking about marginal savings? Also, what about those small car buyers? My neighbor was just complaining about car prices.
It's quite significant. Many items that were previously in the 18% slab, including certain food products and personal care essentials, have been moved down to 5%. For small cars and two-wheelers, the tax cut is substantial, and reports suggest prices could drop by 12 to 12.5%. This is designed to put more money back into the consumer's pocket, hopefully reigniting demand. Businesses will also see eased compliance.
That's some tangible relief. Cheaper daily goods and cars. That's a direct impact on millions. No wonder the market is reacting so positively. Speaking of which, what's been happening on Dalal Street since these announcements?
The impact has been immediate and profound. Both the Nifty 50 and BSE Sensex opened on a significant gap-up note today. The Nifty surged over 160 points, crossing 24,800, and the Sensex opened more than 550 points higher, topping 81,100.
Wow, that's a strong start to the day. Which sectors are really feeling this tailwind?
The auto sector is definitely in top gear. The Nifty Auto Index saw the highest surge among sectoral indices, up over 2.25%. Mahindra and Mahindra, for instance, jumped over 7% in early trade, hitting an intraday high of Rs 3,517. Other auto majors like Eicher Motors and TVS Motor also saw significant gains. FMCG stocks are rallying as well, with companies like Hindustan Unilever, Britannia, and Colgate seeing their shares zoom up to 7% as the tax on daily essentials has been brought down to 5%.
So a double whammy of good news for consumers and investors in these sectors. It's great to see policy decisions translate so directly into market optimism.
Absolutely. The market views these reforms as a powerful incentive for consumer spending, which is critical for economic growth.
Time for some quick hits, Sophia. What else is making headlines across the financial landscape?
First, on the regulatory front, SEBI is reportedly considering tighter intraday limits on index derivative positions. This move is aimed at addressing concerns around manipulative trading strategies and protecting retail investors from potential losses.
Tighter limits, huh? That sounds like SEBI is trying to rein in some of the speculative frenzy. Good for the everyday investor, I guess, but I can imagine some traders might be a bit
annoyed by the added restrictions? Precisely. It's about striking a balance. Second, the RBI recently revised its KYC updation guidelines, aiming to improve convenience and financial inclusion.
Oh, KYC updates always feel like a chore. Any simplification there is definitely appreciated by customers. What's our third quick hit?
Our third quick hit relates to broader economic activity. The August Purchasing Managers Index, or PMI data, showed India's service sector activity hitting a 15-year high, driven by strong demand. Manufacturing activity also expanded to a 17-year high. However, for services, the data also indicated an intensification of inflationary pressures.
So, strong growth, but a red flag on service inflation.
It's a bit of a mixed signal, isn't it? It feels like we're always walking this tightrope between growth and managing prices.
Indeed, Jason, and that brings us perfectly to our What to Watch segment. Looking ahead, the most critical data point coming up is the Consumer Price Index, or CPI data for August, which is expected to be released on September 12th.
So, the optimistic news from the GST Council is fantastic, but as we've seen in past instances, data might still end up mixed, and financial decisions can be based on several interrelated factors. This will also be the case for this upcoming CPI data, right?
Absolutely. The market will be keenly watching to see if the disinflationary trend, particularly in food, has continued, or if other categories, especially services, have pushed the overall number higher. If inflation accelerates, it could dampen expectations for further interest rate cuts by the RBI, potentially keeping the repo rate higher for longer. Conversely, if it remains subdued, it gives the central bank more room for accommodative policy in the future.
So while today's GST news is great, the inflation numbers next week will give us a clearer picture of the RBI's next move. Always something to keep us on our toes.
Always, Jason. That's the Mumbai market for you.
And that wraps up another episode of Money Moves Daily, the Mumbai market. Today we celebrated the GST Council's Diwali bonanza and its immediate boost to auto and FMCG stocks. But remember, we're keeping a close eye on those upcoming CPI numbers.
A big thank you to our listeners for tuning in. Remember to follow us on your favorite podcast platform and stay informed as we track the pulse of India's financial world. I'm Sophia Reyes.
And I'm Jason Miller. We'll be back tomorrow with more Money Moves Daily. Until then, invest wisely.